Okay, so how to find better trades? Let's get rolling. So a little background on myself. I've been actively trading for now, gosh, over 4 decades, which is kind of need to pinch myself when I think about that. And options for, over three. So started my trading journey back in the 80s on the oil side. I was fortunate enough to get into a company that actually would, train you how to teach, or train you and teach you how to trade crude oil. So at that time, it was a large company that we had a lot of refineries, Coastal Corporation, and they had refineries all over the world. So we were always, supplying the crude. And so they had a fantastic training program that would take you in and teach you, how to move crude around either by ships or pipelines. So I got into the cargo side of things and never looked back. It was just a great, fun career the whole way through. So spent about 5 years there. It sent me out to Singapore for a couple of years trading products. That was really fun. And then ended up with a company called Transworld Oil back in the mid 80s. And they were at that time the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. So I spent about 17 years with Transworld and ran the international trading desk for 10 years out of Bermuda. And that's kind of where I started trading options back in 87. And so we were in pretty much every market. So got to experience all the different markets from foreign exchange to all the different futures markets and big time in the energy side. But it was a great learning experience. And the one great thing that's interesting and fun about trading is that it's always continuous learning. The journey never ends. So it makes you always thinking on your toes. And it's a great thing, or passive income or, full time, whatever. It's just a great way to make money, plus, keep your mind active. So that being said, let's move on. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, in trading, the reality is that as an individual trader, we really have to do a lot all alone. So, as you know, one of the most time-consuming and expensive tasks is finding really good high probability trade setups. And so over the years, I gradually combined what I learned from my employer that paid for everything back in the day, which was great. Your research, everything was paid for, so that was a great thing, right? But what I've done over the years, I've developed my own kind of research process and resources to use for, finding selective trade setups, put together and developed my own proprietary technical trading indicators, and then developed a strategic kind of option guide that helps to select which option strategy to use, for the best results based on the market condition you're trading. So this all evolved into a process that helps to find the best trades and best option strategies to use based on the market environment we're trading. So as you probably, everybody here knows, the market's always shifting and changing, and there are always different pieces to the puzzle to make the thing kind of work out. So it's a kind of a never-ending thing. There's always going to be uncertainty in the market. There are always going to be changes. So we want to kind of have a process how to spot these changes that are coming up so we can react and find some good selective trade setups based on the changing markets. Now, what I recognize, though, based on my 4-decade trading journey, is that my best, most profitable trades all have some of the same underlying characteristics. So went back, through and looked at the trades and just kind of deconstructed and looked at them to define, what was making these winning trades, the characteristics that were involved. And then I took that, developed a repeatable kind of trading selection process to identify and find these kind of trade setups. And I put together kind of a 13-step systematic trading selection process to go through, kind of a checklist of things to be looking for. So we'll kind of go through this and I'll show you the process and then, kind of show you the ins and outs, and we'll look at it, other things as well. So first off, the current market. We always want to know, be in touch with the market trend. So that's sometimes it's more difficult than others, but we're going to do kind of a brief market review here, and any questions, please put them out there and be happy to answer them. So first off, I like to look for sector rotation. So this will really help you to define which areas of the market are currently moving. So it can really help you then to drill down, and this is where you can then cherry pick and look for the different trade setups that you want, and always have kind of a watch list based on the market rotation of where money's going in and where money's going out. So this is kind of a sector rotation map here. So you can see currently we've got on the S&P 500, this is the last 5 days. Okay, so you can see the rotation's been really pretty heavy in the communication service sector, things like Microsoft, Google, et cetera, and then consumer discretionary, Amazon's, things like that. Now also then the technology sector, so this has been the big money rotation you can see for the last 5 days, but you can also see it's also for the last month, same area, money going into these sectors in the big time way and coming out of things like energy. And then you look at year to date, same place. So for the whole year so far, these have been the areas where money has really been going into: communication sector, discretionary, and technology. So that's where you can then drill down into and find the trades that are moving in momentum and build your watch list, to constantly monitor for specific trade breakouts you're looking for based on, what I like to look at market patterns and things like that in my technicals. So this is where then you can draw your list from, and then you monitor the list and use your other, technical indicators, things like that for your trade entry and exits. So then the next thing, I always want to be in touch with the seasonality. So basically every commodity is going to have some kind of seasonality to it. So this can also help to give kind of a momentum or wind at the back of a specific trade if you've got the seasonality in your favor, and can be, a headwind if you don't. So I always want to be kind of in touch with that. So if we look currently at seasonality, these are what are called the seasonality continuation charts. So this is the September S&P 500, and you can see that looking at the seasonal trend here, the kind of this magenta is 26 years, the black is 15, and the 5 years is red. So you can see here, typically seasonally around the 23rd of May, so we're coming into that right now. So basically right here, we get a kind of a seasonal bottom, and then a potential seasonal trend to the upside into, the second week or so of June. So for the next 3 weeks, we can have a potential seasonal trend at the back of the market. So that's a positive. So if you're, if you're going long, you can look to see the seasonalities in your favor as well. So that's for the S&P. Now the next one, when we look at the NASDAQ 100, it's even stronger as far as the seasonal trend. It's already been having the move over the last year to date, so we saw that in rotation. But you can see here the seasonal trend is still very strong, stronger for the NASDAQ than it is for the S&P. So you can see it tends to have that kind of swing cycle low here around the 22nd, and then has potential to have that move back up all the way into end of July. So it has potential good seasonality to it. So this can tell you to, be looking to buy dips in the market on NASDAQ related type stocks as far as a seasonal factor to your, to your benefit. And then I just want to take a look at crude oil, since it's a big, part of the markets that we like to look at. But it tends to have a seasonal swing high right here around the, May 20th. So right around the going into Memorial, weekend, we will get the kind of a seasonality swing high. So we're currently right here, and then you can see it tends to pull back. So there's not a whole lot of great seasonality right now to the energy sector. So that's one thing that be aware of that as far as crude oil. But now we're getting hit pretty good low cycle lows on the crude side. So we'll take a look at that here in a minute. But that's kind of the seasonalities. Now the next thing I always like to do is look what I call the top-down market review. So this is where, once or twice a week, you should kind of do this kind of analysis to kind of keep an eye on the bigger picture. So what I call the macro all the way down to the, short-term intermediate time frames. So when we do this, used to do this just based on macro fundamentals, but now we've got all the good charting tools and things like that. So it's a lot easier and faster. So when I look at the current setup, this is the S&P 500 SPX, and these are my trading indicators that are based on momentum. So what this does is shows me when the market is starting to get more, buying coming in, momentum to the upside or downside. So You can see I use three kind of indicators that I developed for this to measure momentum. One I call the lower study cycle 1, which is a fast momentum indicator. And then 2 is a kind of a slower momentum indicator to kind of confirm the momentum to upside or downside. But this is a really big picture look. So this is a monthly macro, and we currently have cycle 1 and 2 positive. So the downtrend is definitely over. So based on this indicator, you can go back and use this back to 2000, 2008. This has shown the market bottom every time. So I'll show you this in a minute. And this is what we call a cycle reversal here on the monthly. So we're definitely back into trending back up here, and so we've got, you can see also this is kind of a rounded bottom. So the next big target up here is like that 48, and then we'll see where she goes from there. So we can always then measure these different moves using Fibonacci, things like that. So the macro trend is up. It doesn't mean it can not back and fill because we're getting stretched, which I'll show you in a minute, on a lot of different sectors. So we definitely could be getting a pullback here on certain areas of the market. So that's the macro trend is up. And then you look at the medium term, which is usually the daily time frame to measure it. This is what we call a volatility squeeze. So it's been in a really tight range here over the last weeks. You see this range. I'll pull the chart up here, but we're currently in a uptrend on the daily. So let's just go back and I'll show you in the prior time frames how these indicators work. And these are the indicators that I use for setting up, trade alert setups and things like that for the alert service. These are the tools that I use. So if we go through currently and look at the macro, I'll point out where we were back in 2008. 1 second here. Let me get rid of something here. So if you look at the momentum indicators right here, so we had the market pull back around the first this year. So you can see we had what we call these arrows. This purple arrow is what indicates the cycle reversal. So you can see the cycle reversal happened down here where my pointer is, and then we had momentum, that red arrow. So then we can see momentum starting to shift down, and then we got the sell-off, right? So if we look back here to, we can go all the way back to 2000 for the last big move down, and then we'll go to 2008 and see how these indicators pretty much nailed the bottom as well back here in that time frame. Let me readjust this here. So this is back, going back July of 2000. Basically, here's August and here's September. So cycle reversal right here, right there, and then momentum starts to shift down. See the histogram indicator, see how momentum now is going negative, and then we had the big sell-off, right? So then we started getting a market bottom back here. We had a cycle reversal come in, and momentum and cycle reversal right here. So this was back in March of 2003. And then we had our momentum shift back up and the market started trending back. So here's momentum up, and boom, there we go. So start trending up. So then we had a big, market rally, from like 900 to 1200 up here over the next year or so right there. So these indicators are really great at spotting these cycle trend changes and then showing you the momentum for direction. So that was back in 2000. And then just going forward to show you the other big correction was 2008. And again, just what I say is track and follow the momentum. So solid momentum. And then we start climbing up to the upside here. And this is getting into 2008. And again, we had a cycle reversal come in right there. And then momentum starts to shift down on cycle 1 and 2. And then we had that massive sell-off. And then again, the market bottoms right here. First indication is a cycle reversal right there on the monthly, and then we get momentum, cycle 1, and so 2 confirms, and then up she goes. So that's where we are currently, so we're right back to kind of that same situation where we have bottomed out, and now the question is, where can we go to the upside? So one of the easier ways to do is look at our Fibonacci levels, and let me just put those back in real quick, and we'll see where the big targets are going down the road. So we've got, these will be the areas to be looking for down the road in the next, over the next year or so, however long it might take. But we're going to see that the next major area of resistance we're coming into currently. So market went out at 41.91, so 4,200 is the big kind of area right there, right where we are here. And then we get up to this 618 retracement that is coming from that swing high back in January of this year to the swing low here in October. So then we got that as the next target after we break through 4,200. So that will be to around 43.10, and then it clears there, and then we've got a move back up to the prior high of 48.16, and then the next area up would be like 51.77. So that's a look there on the monthly, and then the weekly. You want to see the weekly is a good time frame also to kind of see if it aligns with the monthly and the daily. So the weekly is nice, strong momentum as well. And you can see the more defined areas of resistance. So coming in here, this is the 50% retracement at 41.54. We closed above it, Friday, and we're right into this 100-week moving average here at 41.97, in this resistance area at 4,200. So it's kind of chipping away there. Now we've got, a couple things this week. We've got the debt ceiling, but we've also got a lot of different tech stocks that are very, very stretched. So we could see a little bit of a back and fill. We had such a big move up last week, but the trend is up. And so it's a question of then looking for, the best spots to re-enter the market. So that's a look at the weekly, and then we break it down and say to the daily, we can get a better, defined picture where we currently are. So that's currently where we're setting up there. And then if we look at the NASDAQ, that's the one that's getting stretched. So the NASDAQ's the one everybody's been chasing. It's really kind of turning into FOMO, and a lot of that's with the AI stocks. So you can see the NASDAQ, though, has really had the big move up. And if we look at the macro picture on that one real quick, you can see we're through the 50% retracement from the swing high to low, and that's at 331. So we're through that area. Next area would be 341, and then 350, and then up we go. So that's a look there from the monthly, and then we break that down, like I said, top down, and then you can see the weekly. We've broken this 50% retracement. The next big area of Fibonacci would be up here to 349. So within this, though, then we will look at the various sectors, and you'll see that the semiconductors have had a huge move, and all the AI stocks. So we'll look at a few of those as well. So that's kind of a look, where we are, but the trend is up. So, we're going to probably, the markets are a little stretched in certain areas, so we could definitely get a pullback, but be looking for buying opportunities. And there are certain sectors, though, that are still weak that we can look at potential short setups, and I'll show you one of those here in a few minutes. So let's look there. Now, the next thing is, going about selecting the best kind of swing trade setups. And so what I use to kind of base the swings on, and what I want to look at, the kind of part of the selection process, is first, what's the market cycle trend? So currently, based on my indicators, based on momentum, and then also looking at moving averages, the current trend, macro trend all the way up, is now, or all the way down is up. We have been in a downtrend, now we're back into an uptrend. Now, the market condition also, we've been at very extremes over the last year and a half to high, but right now I think the market is a little bit more low as far as the market uncertainty. And we do have the debt ceiling hanging over, but the tendency is, that can go in the final hours and create some volatility. But the market's kind of looking through that a little bit until, Friday, there was a little bit of stalling action. So the market did sell off a little bit Friday afternoon. But kind of lower volatility market, the VIX is super low, and the Fed has done their thing. They're kind of starting to tame the inflation side. It is trending lower. They've had interest rates up to the high end, so don't think the interest rates they're going to be able to raise too much more. It causes too many more problems. They might, but the market strength still looks good. Labor looks good, so kind of a lower market uncertainty environment. The other thing we can check and use relative strength. So there's a lot of ways to measure relative strength as far as, the market condition. And then another thing I would really always look at are various chart patterns. So I've put together kind of what I look for, 5 what I call high winning probability type chart patterns. So when I put together a watch list based on, volatility scanning, sector rotation, the next thing is then within that watch list is you want to get a good setup for an entry point. And so looking at the chart patterns along with my indicators and momentum, this will, give me the areas of the best potential setups and selective trades to look for. So we'll go through and I'll show you what these chart patterns look like. And then you need to put together your time horizon, your trade duration. How long do you think the trade is going to, be before it, hits your potential profit target? So we'll look at duration of the trades and a lot of different ways that we can put that together as far as time horizon that we're needed. So we can look at option, we can look at the option chains and the expected move, things like that to give us trade duration. So these are all things that go into every setup that I look for and that I will send out with our alert service. So then the step 1 through 5 is identify the market cycle, your market condition, and then validate stocks relative strength. So we can do that with momentum and some other different things we can measure, and then time horizon. So first off, market cycle trend. Currently, based on my indicators, the trend is up. And primarily I use 4 moving averages that help define trend and identify and track trend and define areas of support and resistance. So the key indicators that I'll always be looking at will be the 8-period exponential moving average, which is a faster measurement, 21-period exponential, and then 50 simple and 200. So most market players and technicians are really, really focused on these 2 time frames, the 50 simple moving average and the 200. Now there are some other ones that are, you can look at the 100, the 150. So I look at all those as well. But these are the kind of the 2 key bigger moving averages that can identify and track trend up or down. So we want to always be aware of where those are setting up or where those moving averages are. So then the market condition, so you want to quantify the degree of uncertainty. Is it very high? Is it extreme, et cetera? So what can make it high? Things like, the FOMC, if the markets get too extended to the upside or downside, non-farm payroll, political events, earnings, things like that. And then extremes are things like the war, economic crisis, pandemic, COVID, things like that can make a very extreme market condition. Now, the next thing and one of the most important things I will look at for price direction is to monitor and look at momentum of price. So trading in any type of market environment all comes down to price direction, timing, and then managing your risk once you get into a trade. And the best trading tool for signaling price direction and giving you that potential direction of price and market timing is to use momentum flows. So when I look at momentum indicators, what they do is they measure price strength or weakness. And when this measurement is taken across multiple time frames, this really helps to create a really good trend following indicator to use for spotting and helping you identify new price cycle trends early before the herd, and to validate the strength or weakness of a trend or a cycle. And then that will also then help you to keep inside a trend or with a trend longer to maximize your profit. So if you've got good strength and momentum across multiple time frames, say to the upside, then you're going to be more confident to stay with your longs. If you have it more so on the downside, more confident to stay with your shorts. So currently, the momentum is really stacked to the upside. So want to be more focused on trying to identify some good trading setups to the long side. So the momentum indicators, these are indicators that I developed, based on a lot of different things, tools, a lot of different indicators I've looked at over the years. So I've come up with these specific indicators that I've developed, okay? So they're based on a lot of different things that go into them. And, don't have enough time to kind of go into all that today, but they're basically, the foundation is measure strength or weakness, and it's based off of momentum. So these are the tools that I put together for that. Now, if you want more information on that, though, let me pull this up. You want to see more information on these tools, you can go to my website, powercycletrading.com. And if you remember, you get, just to point it out, you get 60% off on any of my tools, indicators, or courses. So these are the trading software indicators that I've developed over the years. So one thing that I use a lot, and I'll go through in a minute, is what I call my volatility breakout scanner. So this is where I can find a lot of trades based on momentum breakouts. We're looking for upside or downside. So this is a scanner here. You can see all the details if you want to look there. Now it's, like $3.97, but if you're a member, you can put in your membership code and you'll get a 60% discount off of any of these prices. So these are my custom power cycle directional indicators with the momentum, based volatility squeeze, things like that. So that's the primary thing that I look at for all my kind of trade setups is based on this momentum. So, $5.97, but you can, get this at 60% off. So these are all the different tools that I've developed and used over the years. So it's been a long process, but, always thinking about, okay, how can I make things better? And so these are some of the tools that I've come up with over the years of doing this. So just to point that out. So go there if you want to get more information on some of these tools and indicators. Now, the best winning probability trade setups I like to do is look at these various defined chart patterns that I put together. So these chart patterns, they're kind of 5 different patterns that I look at. And within the 5 patterns, or within the 4 patterns, the cycle high reversal, cycle low reversal, retracement reversal, cycle high retracement, there's this one pattern that I really like to try to identify and find, which is called the volatility squeeze breakout. So this is a pattern which is basically when price consolidates or coils. Okay, so then it's going to just kind of coil, but it's not going to stay there forever. It's going to eventually either break to the upside or break to the downside. So that's a potential pattern that's really explosive and fast moving. So within these other 4 patterns, if I spot this specific pattern, then I'll really focus in on, say, a cycle high reversal that has a volatility squeeze, or cycle low reversal that has a volatility squeeze, things like that. So a cycle high is something that's kind of starting to turn over, but then there's a volatility squeeze. So I really would focus on that. Or cycle low, starting to come down, turn with the volatility squeeze. So these are really specific patterns that I've identified and like to look for. So we'll go through a few of these and I'll show you what they look like. So first off, the volatility squeeze breakout pattern. So it's a compression squeeze pattern identified as a period of, again, price consolidation where price is kind of really coiling in a tight pattern, and then it has an explosive momentum breakout, which can be either up or down. So that's where we use momentum indicators to give us the indication or forecast, will the momentum break be up or will it be down? So momentum indicators will give us that information. Now, when a security then has multiple time frames in this kind of squeeze pattern, these kind of breakouts can be even more powerful with greater follow through, kind of what I call a chain reaction explosion, like lightning in a bottle. So you have one time frame sets off the next time frame, the next time frame, the next time frame is kind of like a tsunami. So this chain reaction then set up by a lower time frame creates that volatility squeeze of a lower time frame to ignite the next time frame up, and it can really create a huge trend shift. So it's a great setup for swing trades or even day trades. When you get these volatility squeeze firing, day trades can be really profitable really fast. So it gives you a really great big timing edge for your trades. And remember, time equals risk. So the faster we're in and out of the trade or any trades we're putting on, the lower the risk that we have in that trade. So here's a really good example of multiple volatility squeezes over a course of time. This is what the pattern looks like. So this is on Netflix, and this is a daily time frame. So you can see the squeeze pattern. So it's indicated by these dots within my indicator. So see how tight that is, just coiling like that. And then momentum, see momentum is up, cycle 1 is up, 2 is up. We had a cycle reversal, and what happens? It explodes and breaks to the upside. So then we get a pullback. You see momentum shifting down, so we get a pullback. All right, follow the momentum, the cycle. Okay, but then we get another period of consolidation here on Netflix, that coiling pattern indicated by the dots of the indicator, but then the momentum's up. So which way does it probable break out? Up, not down. Now it could break down, but this is going to tell you the probable direction. So then we had a big move up, and then it starts to get exhausted, comes back down, moves back down. Then we get another volatility squeeze here, momentum telling us break to the upside and then up. Now what this will help you to do is currently, let's say, for example, stocks like NVIDIA that have just been on this tear to the upside. So what I'm kind of looking for are stocks that have had that big run up. We know they're super strong. We want to get in them, but we don't want to chase them. So we're going to have to be patient. And when they come back down and give us this consolidation type pattern, that's going to give you the opportunity to get into some of these high flyers that maybe you missed the boat on. So something like an NVIDIA, something like a Microsoft, something like Google, whatever it might be. You want to wait for this consolidation type pattern. That'll give you the opportunity to get in and not be, kind of flushed around as much. So if you're just chasing FOMO with these guys up here like this, you're just crossing your fingers and hoping that the thing, there's more buyers, but eventually it's musical chairs and it'll get exhausted and it'll rip down to the downside and rip you to pieces. So this is where it's critical to use tools to kind of gauge market momentum and gauge what we call overbought, oversold, and overextended, which we'll go through here in a minute. So these are the other four main patterns. So this is what I call the cycle high reversal. So this is where the markets are moving above all their key moving averages, and they get to a certain extreme where they get a cycle high and they run out of buyers. So call it buying exhaustion. So this is where this indicator here is our extreme range bands. It's based on average true range. And when we get to this third ATR, this is where the markets get super stretched. And it's an area where, if you're long, you want to be taking profits or managing your risk for potential pullback. Now, if you're not in the market and you're looking for an opportunity to get back in, this is an area where you just want to be patient and let the market see if they do start getting exhaustion, and give yourself that mean reversion so you can get back to a key moving average, have an opportunity to get back in. So if you just look at this one, this is NASDAQ QQQ. This is a weekly time frame. So you can see here, and we'll go through here in a minute, but you can see here it exploded up, right? Everybody's chasing it. But then what happens? We get a cycle reversal from a very super overbought weekly time frame period, and it did finally get that mean reversion. So that would give you the opportunity to get back in. Comes back up, cycles back up. Here another too extreme to the upside. What happens? Buying exhaustion, cycle reversal on the weekly, pulls back to that 21 mean reversion. And here was another one. So currently there are a bunch that are like this, which I'll go through here in just a minute. Let's just go through the rest of these and we'll come back and I'll show you this in real time currently. So that's a cycle high reversal weekly. Here's a cycle high retracement. So what this is, the retracement reversal is a pattern where you get a move up and it goes into a key overhead moving average, this resistance, and it bounces off that resistance. So here's a really good example of a retracement. So this is SPY, a retracement, and that's the 200-day moving average, okay? So it's sloping down. So you can see it had a great trend up, but what happens? Bumps its head into that 200-day. First time up, it could break through, but it's probably 99% probability it's going to fail and come down. Now, when it starts finally chipping away, usually three times or more, second time, usually it'll fail again, but then start being careful. The third time, fourth time, that's when it cracks like a tree trunk, right? But that first time up, never buy into a 200-day moving average, either up or down. Let it just kind of do its thing and then wait. Typically, it's going to pull back. So that's a retracement reversal into the 200-day on the daily, and then it fails and momentum shifts and it goes down. Now here's the cycle low reversal. So this is where we had a massive sell-off, and these can be some of the best trades because you've had this massive selling coming in, right? and then it too gets exhausted. So finally the sellers run out of, first you've got people that are, long getting stopped out, and then you've got the trend speculators coming in. Finally, you run out of sellers, and then the momentum starts to tell you, okay, we're starting to bottom. So we get a cycle reversal, then our momentum kicks in, and then we've got a move back up. So these can be really great trades, for picking that cycle reversal back to the upside. So that's what we're looking for, these reversals up, reversals down, and that's where we're going to get the best trading opportunities. And then here's your cycle low retracement. So your market's been moving down, it comes into a key support area and a retracement to the upside from that support. So here's again QQQ into a weekly time frame, and here's just the other way around. It comes into sell off real hard. This is the weekly 200 period moving average, big huge support, finally gets to bottoming, momentum shifts, and back up she goes. So these are the patterns that I look for. So once you've been looking at them, you'll see them pretty fast. So currently that's kind of those patterns. Now let's go through, I'm going to take you through the trade scanning process, and this is the other thing I look at for spotting breakout reversals for building the watch list of trades to kind of select from. But since we were looking at extreme ranges and stretch, I thought I'd show you where we are currently. So this is just going to be using a weekly. So this is what I call long term, but what you're going to see here, I'll take you through a few, and you'll see really fast that, yeah, man, these things are stretched. They're crazy, way too high. Doesn't mean they can't keep going, but they're in a kind of a exhaustion area. Okay, so here's just the NASDAQ 100 QQQ. So if you look at QQQ, this is a 2 ATR, that white line, and then this one is a 3, so that my extreme range band. So when it gets to 3, 2 is a normal price move. Okay, so this is the weekly though. Now, if I shift this over to daily, you'll see even, more extreme. So you see it's way over that 3 ATR. But with this kind of market, the strength of it, I tend to look at the weekly because this can keep grinding up. So I wouldn't be surprised though, correction can happen anytime, but it could easily go the strength of the NASDAQ. You can see the next big area is going to be that 350 area. So it's currently at 336, and 350 is within spitting distance, but that's going to be where you're going to want to start. This is getting way too stretched. That's when you're going to want to start probably looking at QQQ for reversion. Now, the other thing I look at, this is a really great tool, is when I look at this extreme, when it gets to that 3 ATR extreme range stretched area, then I look down below. This is my reversal indicator. And so the white is the indicator. Now the yellow is the 14 period moving average of this indicator here. So as it starts the strength, you can see the moving average starts to creep up, right? Now once this moving average though, especially on the weekly long term, gets above this overbought, that's 90 percentile overbought right there. So once it gets over that 90 percentile, very high probability, and then the white indicator, the reversal indicator crosses it, that is a super major reversal trend signal. Okay, so we're not there yet, but it looks like it wants to go there. So you just kind of right now, just what I'm doing is looking at other areas that haven't had the explosive moves and trying to cherry pick other areas that are maybe lagging. And then the ones that have had the big explosive moves, then you need to be patient and look for those to pull back into that consolidation pattern, that sideways squeeze pattern for an entry. But if you look here at the QQQ, here's the last time we had it. This overbought was right back here. So this is back in August of 2021, right here. Okay, so you can see the indicator crossed over that 14 period moving average, and look what happened. It went sideways for 1 week and then had the mean reversion. So it topped out here. That was a 381, had the mean reversion, went past that 21 period and had a move down to 349. So you can see it's a very, very, very powerful pattern. So that was the last one that was this overbought. The one before that was right here. You see where the yellow is way above that 90 percentile blue line, and then we had the reversal, that purple arrow. mean reversion all the way back down. So it went from that top was 338, pretty much nailed it, and then down to 298. And here was another one right here. So this was back in August of 2020. So these don't happen very often. So we're going to be there, you know, could be a week, next few days, we could get up here. And then I'll be really focusing on this. And then there'll be a lot of things that we can look at. So that's QQQ. And then within QQQ, then you monitor all the big leaders of that. So for example, AI is a rage, right? So NVIDIA, look at this. And this is the weekly long term. Now, you know, if you're long, fantastic. But if you're not long, you know, it's not advised to chase it right here. You know, it could keep going up, which it could, but go look somewhere else. Now, what I'll be looking for with NVIDIA, you've got earnings coming up here. So this could either explode it more, but we could already have most of the move in based on earnings. We don't know yet, but it's very, very overbought. So this is one setting up for this kind of potential pullback. So you can see the 14-period moving average is way over that 90 percentile. And now it's in a different place. Now, you know, everybody wants NVIDIA AI, and good reason, but when it gets at certain points, it's just going to get too stretched, and you will have buyers start taking profit thinking, you know, the valuations are too much. You know, you don't know what the reason is, but there will be one. So you can see here, it got super exposed to the upside and stretched, and then had that reversal here, and then massive sell-off. Now that, you know, may not happen again, but that's, you know, what you're looking at. So NVIDIA, you missed the boat. So what you'll be looking for, what I'll be looking for NVIDIA is that consolidation pattern. And so I'll be dropping down probably to the daily and the 4-hour, and using my other tools to look for that pattern. Let me pull it up here real quick. I'll put it 1 second here. Here it is. So what I want to find, and I'll be monitoring for, is kind of a daily squeeze pattern or even a 4-hour. So here's NVIDIA. So you can see here it was in this squeeze pattern here for, man, a long time. So this was April, and just churned up and down, and finally had that breakout. So we want to look for that. So a lot of times what we can drop down to is the 4-hour. That'll be the first time frame that'll give you this potential. Let me get rid of this real quick. This is my opening range breakout study. So what I will want to look for, it may not happen, but this will be a really good pattern if we get this 4-hour squeeze, which I was trying to find one for you. NVIDIA's been moving so hard, it hasn't been consolidating very long. So the daily had a pretty good squeeze there. Right here, see this consolidation, see the dots, that defines this volatility squeeze. And then the momentum tells you potential direction. So right here is where it broke out. See where right there. So typically when you see the squeeze, what you want to do is when it breaks the prior price highs of that area, then you jump in. So you can see it pretty much was breaking out right here. So this was the perfect entry right here based on the squeeze. See the momentum right here? Okay, so right about right here. Okay, see the squeeze right there? And then we had cycle 1 and 2 go positive. So it was breaking those prior tops. That was the perfect place to get in. And there are a number of different strategies that we use to sit, you know, and wait if we need to wait. So right here, you see these tops right there? So breaking that 281 right there. That was the trigger entry. Now it did pull back, but that was a good entry. It pulls back to that 21 period, and then up she goes. Let's look at a couple others. There are some that are even more stretched than this, but I was going to show you a few, but NVIDIA is one that's been really stretched out. The other ones are just the AI stocks. So just, for example, even Apple. So there's Apple currently, just 2 ATR. It could definitely go up here. I think, 176, not as overbought. You can see right here. But here are a couple. Microsoft's very stretched. So Microsoft, that's the daily. Let me put it to the weekly. Okay, Microsoft's very stretched. Now it's not, it still could go further. See the 14 period moving average, not quite above it. It could pull back before, but when it does get over the 90 percentile, that's where you really want to be watching it. And if you're long, you definitely want to, get out of your length or shape, start hedging it out. So here's the last time it was this stretch right here. See how it gets up here, see that 14 period moving average? And then finally crosses there, and then momentum was shifting down. I don't have the momentum indicators, but then you can see it finally exhausted. So be looking for that. Now it could, with AI, it could still, grind higher, but we just also got through monthly expiration. So typically once you get through monthly expiration, the markets will typically a lot of times take a breather, maybe pull back a little bit and then look for that next leg. So that's Microsoft. Here are a couple others. Here's Apple on the weekly. Let me pull that up. Very stretched, not quite all the way there, but look, once that white starts crossing the yellow, just to make it simple, last time we had it this close to this overbought was right back here. I already marked it. See here, this was back in August of 2020. And here was back into January of 2020. So this doesn't happen very often. All right, so these can be fantastic opportunities. You're always thinking, I can't short Apple, but something will happen. Here's another one. This is a really good one that I'll be really looking at. Look at GE. Man, oh man, oh man, just straight up. Now, this is insane overbought. But, again, look at this. So here it was right there, and it's still grinding up. So we're going to watch this. Now, what you want to do with this one is use this with momentum, okay? So just to go back and look at GE, what I'll be looking at, I know it's super overstretched. You don't want to be buying it here, but it's like musical chairs. Look, everybody's buying it, hoping for the next buyer to step in and make it go higher. But at some point, the buyers will step away. Now, looking at momentum is going to tell us when that starts to really happen. So if I look here at my momentum, you can see it's still positive on the daily, so just leave it alone. Okay, so if we look at then other time frames, I'll show you. I've got another indicator, what I call my multi-time frame squeeze indicator, that will show me every time frame that's showing a squeeze, and this will help me, analyze it much faster. So let me put this tool down here so I'll show you that. So if we look at, GE. This is the way I find the setups. So if I look at GE right here, so what I'll be looking at is, so I'll monitor this every day because I know it's too stretched, and at some point it's going to, pull back, mean reversion. So see my pointer right here? So this tool is great because I can see everything on one chart. So the top row here shows every time frame that's in a squeeze, 4 minute, 5 minute. So what I like to look for is a 60-minute squeeze on up. I love the 4-hour squeeze with the daily. And then the bottom row shows every time frame the momentum. If it's red, it's negative. If it's green, it's positive. So you can see the 4-hour here, daily, 2-day are positive. So momentum's still up. So I would not be doing any shorts here yet, but this is one I'll have on the watch list for a short down the road. Okay, so you have to have a watch list to help you get started, right? So the momentum's still up on that one, and you can see here, I can see real fast, 4-hour daily momentum still up. So I'm just gonna monitor that, put on the watch list. I'm not gonna short it, but I know this is getting extreme. So that's one. Another one is the home builder sector. So we look at that and then you drill. So what you can do is look at the ETF. What I like to do is look at the ETF and then drill down into it. So if we look at ITB or something, the home builder ETF, then you drill down into it to see the players are making up. Pulte Homes is super stretched. So let me just show you. So this is the way I go about finding trades. So we look here at the ITB. This is more made up of the individual home builders. You can see it's not weekly, it's not extreme overbought yet, okay? But I'm monitoring it, and so then you drill down inside of it though. Look at the stocks that make it up, and I'll show you. This is another thing I'll do, is this is with my scanner. So this shows everything in a volatility squeeze, but I've got a specific watch list for the home builders, basically. So if I look here, I've got this watch list. I'll come down here, real estate. This is IYR, but I thought I should have home builders in here. Here's XHB. All right, so XHB is good, but it has some of the other ones that are, part of that sector. So ITB is really the more pure play. But if you look here at the home builders, you can see within that you've got, XHB has things like Lowe's, so it's not a pure play on home builders, but I was trying to see if there's any specific home builders. Here's Pulte, okay? So it's not in a squeeze, but I'll show you that in a minute. So none of the home builders yet are in the squeeze. But when you look at Pulte Homes, PHM, super stretched, okay? Now it still can go higher, so I'm not looking to short it yet, but this is one on the watch list. And then this is the weekly. See the 14-period moving average? So it could still creep up even more. But when you look at this from a monthly macro time frame. So what you're seeing here is the 1272 extension. So if you take this prior major swing high back in May of 2021 to this low back in June of 22, you can see we broke it through that prior high. So the next target is that Fibonacci level here at 7150. So if you are long this home builder, you've made a ton of money, but what you want to be doing if you want to keep the share, be selling out of the money, cover calls against it, or taking profit. And then when it gets up here, this is the monthly. This is so stretched out. It's only been up here, this again happened back in February of 2020. See, it got up here. What did it do? Went sideways for 2 months and then just cratered. Okay, so this is on my watch list for a potential short. Doesn't mean it'll be tomorrow or the next day, but this one is going to offer some big opportunity here at some point. So you don't want to be buying it in here. Okay, see how stretched that is? And then once that starts crossing over, I'll be looking at that with my momentum and to tell me when. So you can see here though, if we break this down to the weekly, look at the macro. See, momentum still strong. See, so strong there. So long-term trend still strong. Then I go down to the daily. Now we're starting to run out of momentum here. We've got a cycle reversal. See, the cycle reversals is just back and forth, back and forth. But the momentum now is shifting, and then cycle 2 is starting to come off. So this one might start giving it up here, over the next, few days to a week. So this is a good one to put on your watch list if you're looking for potential short trade setup down the road. So that's how I build the list, okay? And then the other thing I look at is my scanner. So this is the great tool, and we'll go through a couple scans here real quick. So I'll put this on my custom list. So I can look here I can look at energy stocks, I can look at material stocks, I've got the real estate, I've got all the different sectors. I've got SMH, which is the semiconductor sector. So I've got all of the key stocks that make that up. So I've put a volatility squeeze. None of them are currently in a squeeze. They've all been, up to the upside, fired, and had huge moves up. So nothing in the semiconductor sector really. But looking at my custom list, let's take a look. So here's everything in a squeeze here, everything from Costco all the way down. So I won't look at the ones that are coming up with earnings, but let's take a look at a few and see if we can find a few that are maybe setting up for next week. So I'm going to put my indicators over here and get the right ones real quick. I'll put my lower study showing every time frame in a squeeze, and then I'll put my here it is. All right, so what I like to do is look at the daily with the 4 hour, and then I'll look at the multi-squeeze indicator down here so I can see all the time frames that may have a squeeze going on. All right, so I'm going to put this to 4 hours. So this is kind of how I flip through really fast. And I'll also be looking at the weekly time frame. So if we look at Pulte, let me pull up the scanner here. So I'm going to flip through all these right here. I've got these linked to my chart. So we'll flip through real quick, and then when I see some, I'll call them out, and you guys and gals can put it on your list. So what I'll typically do is kind of make a T list, like a accounting ledger. So something like this, you know, and then I'll have, you know, buys, sells, and I can make little notes and some things like that. So you might want to do that, and then you can quickly, then I'll monitor this buy list. So let's take a look. So first off, we've got Costco coming up with earnings, so we'll pass that. Here's TJ Maxx. Okay, so TJ Maxx, that looks pretty good. This is one I definitely put on the watch list. This has a very strong squeeze going on, daily and 4 hour, massive amount of squeezes. Look at this. See below here, so it's got see the 60 minutes red, that means it's in a squeeze. 2 hours red, 4 hour, daily, 2 day, 4 day. This thing is ready to maybe rip, okay? And which way? Well, momentum right now is up. That doesn't mean it's gonna, you know, it could come back down, but potentially the rip's gonna be the upside. That looks really good. Let me, I'm gonna redo my list here to get another sheet out here. Any questions from anybody? Do I include volume? The indicators do not include volume, but I'll look at volume. I'll just put up a volume chart. So what I'll do here, I'll show you what I'll do. Is 1 second. I like to look at volume, but I'll show you how I do it. So here's my cycle reversal indicator here on just a chart. So down below is the volume, okay? So if we look at TJ Maxx, I will look at this, and here's your weekly. So weekly volume is picking up, okay? So I'll look at this on a daily though to see what the volume's looking like. So volume's picking up to the upside. So we're in this tight consolidation phase. And then, but I want to look at the weekly as well. So before I do any trade, I'll make sure I see where it is within the weekly. And see here, the weekly's had a cycle reversal. So that's positive. So the reversal trend is up on the weekly. There's good volume coming in, and we've got that consolidation. So this looks really good. This is one I want to highlight. This might be a good one for next week. If you don't come in. So sometimes you'll spot these and you're kicking yourself because you think, wow, it looks good, and the next day you come in and they've already broken out, you know. This looks pretty good. And the thing is, you know, you've got all the AI stuff as the rage, but you know, there's these other little possible nice little setups like this. And so then we'll look at the option trade to do based on that, and go from there. So that looks good. And again, so what I'll do is I'll put my weekly over there, check that out. Let's take a look. Now here's one that we've been in a couple times. This one looks, you know, this one looks really good for a more bigger downside move. We'll go through this one in a minute, but this is IYR. So this is the commercial real estate sector. Now, if you just think fundamentally, the commercial real estate sector is, you know, rates are high. A lot of these huge, if you've been reading all the different studies and reports, there are a lot of huge office buildings in New York, wherever, San Francisco, they can't get rid of, they can't sell. Their vacancy rates are up 18, 20%. And they've financed and did these projects, these multi-million-dollar, billion-dollar building projects back when there were zero interest rates. Now interest rates are higher. A lot of these guys are coming up for refinance, and they're having trouble getting refinanced. They're having to put more equity in order to get their financing, and they're financing at higher rates. And so also their values have just plummeted as far as their appraised values. So it's been hanging in there over 82, but we've currently got a calendar diagonal on this one. But if that 82 breaks, this thing has potentially bigger downside trend momentum and possibilities to it. So if we look here, just this is one of my favorite shorts. I hate to say that because that'll probably jinx it. But if you look here, and we've been playing this one kind of over and over, but it's been a really strong tight range here. See this? First off, if you look at 82, you can see this has been we'll look at the weekly, it'll kind of define that. But then if you look at the monthly, I call the monthly macro. So if we look at the weekly here, you can see that the 82 is, you've got a lot of price action here. It came down to support there, bounced back up, 82 bounced up, 82 bounced up, then broke. So this was back in March. We had that break. It came down to 78. So that's what I'm kind of looking for, potential move breakdown back to 78. And if that doesn't hold, it could go back down to 75, something like that. And then if you think it could go lower, just look at your monthly, see where the potential could be. So here's your this 150 month moving average. So that's at 78. If that breaks, the big area next support is 73, etc. So that's one if you're interested in potential short. And this is a pretty good ETF to play, but it's really a tight one. So we've been playing this back and forth. Okay, I'll show you the trade setup we've been doing on that. So that's one. Got that on the short side. Here's Walmart had its earnings. It's in a squeeze, but it looks like it's starting to fade to the downside. See that? Now see momentum shifted down, cycle one. Here's the 4 hour. Would not be buying this right now. It looks like it's giving up a little bit, could roll over. This one is actually looking like a short right there. So Walmart, potential short. The only thing I don't like about this is just it's a really, what I call kind of a loose trading pattern, just really whippy. But definitely potential more downside than upside on that one. Here's one, and again, I'm just flipping through these real quick for you. Here's Expedia. I'm going to flip through that one real quick. Oh, hey, question. Hey, sorry, this is first last. Gripping material to learn this is explained clearly. How long did it take you to get this far? How long? 40 years. Okay, it's taken a long time, and I'm still learning. Okay, but that's the great thing with trading. You never know it all. No way. But look at Expedia. Here's Expedia. Here's the daily. That's it. Look at all that moving average resistance. But it's got its massive squeeze, positive momentum. This is what can give you these major breakouts. I mean, it could be contained here, but if it can get through here, sometimes that creates big short covering. You get massive squeeze to the upside. So that might be a good one, actually. So also keep in mind the general trend, right? The trend is your friend. So if you look at the big macro trend, you look at NASDAQ 100, S&P, the macro trends now have shifted up. So the trend is up. So, finding things like this to go long might be a good place to be, because there are probably a lot of shorts that are in here that are still short, hedged, whatever, and they could create that momentum. So, but we want to look at the weekly, and the weekly time frame here, you've got massive overhead here too. So this one might be a difficult one, but I'm going to look at it, put it definitely down. So to answer your question, also, if you're here's the question. So, and it's a good question because I've been doing this a long time, and if you're just starting out, what I would advise is to find yourself a mentor and somebody that can help you, guide you through this learning process. So that's uh, the reason for this presentation today is to kind of go through my process, the way I look at it. These are things I've learned over the years and years and years and tools I've developed. But you can learn this stuff, but you're going to need somebody to kind of guide you through it. So if you want help to do that, that's why I'm doing this presentation, is to show you that I can give you that help if you want it through my alert service, okay? And I'll show you that next, but I want to go through all the stuff. And plus, I'm having fun doing it because it's giving me some ideas. But to fast forward, that's what I'll talk to you about if you do have an interest in the alert service. So, and it's not very expensive. It's I'll just give it to you real quick, and then you can spend the rest of the day with me doing this, or you can go do yard work. Let me just find it real quick here. So we'll come back to the alert service, but but that's basically what you really do need. All right, so there's Expedia, so it has potential. And let's go through a few more here. Coca-Cola. See, Coca-Cola, it's got that squeeze here, but it's coming down into this moving average. That's a 50 simple. So it's got kind of good support down here all the way down. So what I like to do is look for these type squeeze patterns that are on their last, part of support or resistance. But here you can see if it breaks this 62, then it's got a bunch of support down here to 61. Now, if this was trading right here over that 200-day, that would be the short I would look for. But Coke, probably not looking to probably short that one right here. So that's, but I like to look at TJ Maxx. And so that's how you have to, just go through and then look at. Now this one looks very interesting. This is Dollar General. Yeah, this one definitely is poised for a breakdown in this. And, then you can think of the fundamentals, maybe because the market starting to, the discount stores, I don't know, maybe they're not showing too much strength. This Dollar General, man, that definitely looks poised for, see the momentum shifting down, everything's shifting down, a very tight squeeze. So this breaks 213, and you can see the week, let me put this on weekly. So it breaks that 213. It's got the bigger support. It's all the way down to 206. That's 200 week. This one definitely poised potential breakdown. Here's Boeing. Now Boeing's a tough one. It's just been a really crummy stock. It's just real whippy. So yeah, but it's got a nice squeeze. This could trigger to the upside, definitely. Here's XLP. That's the ETF, the staples. XRT, real estate, not real estate, but retail. This looks poised for more downside move. XRT, really tight squeeze. And then you can see if it breaks that. See, then you want to look at the key support areas. So here's the weekly. It's been a really pretty good range here, good support, 58 on down. So this one's been a hard short. But so what we'll do with these types of trades is typically we can use a calendar to target areas of downside or upside, and they're real cheap. But XRT, but it's been a hard one to short. But there's definitely potential more downside there. Russell 2000's got this 200-day up here, just in a tight range. Trying to find any others that look good real quick for you. Target, definitely potentially more downside here. You can see the squeeze starting to develop, and then we look at the weekly time frame. So target breaks this area here, 150. See that? So that's kind of what I call it's on the ledge, cliffhanger. So there's no support below it, right? So the weekly, no support. So if this breaks here, it's got, good potential to go down all the way down to that prior low there. So this one, it could be a really good short. So I'm going to put that down. And then if you look at the daily, so it's got the volatility squeeze, and we look at the daily time frame. Yeah, definitely, this looks good. So see there's see the moving averages up here. There's nothing below as far as any moving average support. So this definitely has potential downside. And then we take our fib levels from the swing low to high, and that'll give us some good targets. Look at that, right on the 618. Put triple stars by this one. Triple stars. Okay, so here's a couple more. Here's Ford. It's in the middle of the range. It looks like poised for more downside. Here's General Motors. It's trying to turn the corner, but it's not having much success. But so these give you a few, and then you can really drill down more. Here's one that looks kind of interesting. Merck. It's got pretty good support all the way down though. Industrials though, this sector to kind of may start being focused on. You can see us trying to turn that corner, momentum shifting up. And there's going to be a lot of stocks within the industrial sector maybe to look at. So I want to look more there next week. Let's take a look at a few more here real quick. Lowe's earnings, ConocoPhillips. This one has some potential, a lot of moving average resistance above, but it could get a short-term pop up into this 106 or higher. You see here on the week, let me put to the weekly, sorry about that. Yeah, I've got it on my list to watch, but nothing too exciting. Cat losing a little steam. So these are a few to focus on next week. There are a bunch of others out there. So the other thing I'll do is I'll come over here, then I can go into like specifically into the like NASDAQ 100, for example. Just come down here, everything in NASDAQ 100 I can then scan. All right, so I can see here anything. I've got ADP. I'll just go through a few of those. Here's ADP. It's looking maybe potential upside. Not at the top of the range yet. There's probably some better ones. Ross. Mercado Libre. Honeywell looks kind of interesting here. See, Honeywell is breaking above that 200-day 513 cross, nice volatility squeeze. This is one that looks maybe poised for a move higher. That might take some time. We're just seeing might cycle one up, but this is one I put on my watch list. And those are a few. Intuit, I'm just trying to find real quick here. All right, so a few things there, and so just that's part of the process. But TJX though looks interesting. Possible upside break, target possible downside break. and then the setup option strategies used. So here's a few that we've done here recently, and these are some of the alert service trades sent out. So again, just kind of go back through my goal, and the goal of trading is really to look for having more winning trades than you do having losing trades, since it's impossible to have all winners, right? So this reality in mind, the performance to date of my trade setup alert service that I've been sending out has been pretty good. So we've maintained kind of an average of 80% winning trades over when I started. So I started this back in 2018, and there are 4 different alert types of trades that I send out. So this is a cumulative of all 4 of the alert trades that I send out. So there are calendar, counter diagonals, butterflies, things like that, earnings trades, and breakout reversal trade setups. But since I started this with the 4 different alerts that are within the service, we've had a total of 609 closed trades. Of those, 454 winners, 36 break even, 119 losers. So, you know, a winning rate of trades, winning success of 80. Now, these are unaudited. These are just the results of just win, loss, okay? And so that's the you know, we've been hanging around 80 up to 82, but maintaining the rate of high winners versus losers. And the way that I do that is through the selection process, being very selective, going through all the detail of every trade. Now, these are trades that are sent out using Telegram. So this is kind of what it looks like. This was, you know, from May 18th, just to show you. This was the one IYR. We have a short trade that shows you exactly the specific details of it. Hold a break even stop. Balance currently at around 83.80, protecting profits, etc. So I go through and I just, you know, constantly will update if there's something you need to know during the day. Here's when we had an Oracle, an update short on IYR. So we use this. So I use this service here. It's super fast. When I put it in, it goes out within seconds. And so here's what it looks like. This is my Telegram over here, so you can see these my alerts that I send out are very detailed, just kind of to tell you what needs to be done if you need to do anything. So just very specific on it. So use this alert service, this Telegram, so they go out. Plus, if you need an email, we'll send you an email. So here's a kind of take you through a few of the trades recently. So these were counter diagonals. Now this part of the service, so these are selective calendar and diagonals. So since starting this back in June of 2019 through Friday, we've had 210 closed out, 159 winners, 10 break even, 41 losers, 80% win rate, unaudited. Okay, here are a few that have been set up recently. Now this market's been a hard one to trade because we've been in this really range-bound market until this week when it finally broke out. So here are a few trades though that we just recent trades. This was Google. This one we did on a call calendar. Now the reason we did this one was because it was Google poised to break out, but it also been chopping back and forth. So we wanted to keep a very tight leash and low risk on the trade. So if you just look here, I'll pull the chart up. You can see with Google before it broke out, it had been really in a tight range. I'll show you here. 1 second. So Google has just been really churning sideways where, you know, Microsoft was going crazy the upside, but Google just kept going back and forth, going nowhere. So you see this range, it had been in this range back since March and had that break to the upside back in February and just been churning. So with this trade, set this up in April, we were just looking for a target trade up into this area here. See the areas where it had been up. So like 110, that area, and selected this because it was super cheap. You can see here this trade was what we call a calendar. So this was like going out long the 28 April 110 and then shorting the 14 April against it. So when I sent out a trade, I go through the process of finding the selective trade, and then I apply an option strategy that might be a good low risk trade strategy. Now, a lot of members will do their own thing, so that, you know, that they just want the alerts, right? The entry, and then they'll go with it and do their own trade. But this one was set up for just $56 a risk, with the potential to make, you know, over 70, or stay with the trade if we wanted to adjust it. So here was the alert sent out on the 6th, and basically just summarize it down here. I'll give you the exact, you know, buy it open, whatever, but then I'll give you a summary. It says go long the 21 April 110, call short the 14 April 110. So this was done, you know, at that time around 55 cents or $55. And then on the 14th, did an adjustment here, and then also was going on vacation, so went ahead and closed it out. So this was up about 83%. So this was the trade setup, very, very low risk trade. I try to always find low risk trades with the option strategy that are going to be used, if I can erase that. So this was the weekly, just so you can see there was this big area of kind of a overhead resistance 110 going all the way back here to September. So they're just targeting a trade towards 110. So if we could make anything up to 110, this was great. And we did this super low risk. So it was trading at 106.70, set it up, and then on the 14th, took it off as trade at 108.87. And this is just what we call a calendar. So we're short, closer in, long, further back, set up for 56 bucks. And trade went out, you know, the spread when we got in was 56 and moved out to 103. So this was up $47, 84% return. And this takes also advantage of what we call positive theta. So just a low risk trade, looking for a little bit of an upside move. Google has just been chopping back and forth range bound. But then, like Google, so wanted to stay with it. So we actually ended up doing another trade on Google. And this was on the 1st, and was now trading at 107.60. So did this one, we did it not a calendar, but we did a long calendar diagonal. So with this one, we're long the 19 May 108, and then shorted against it after an adjustment the 12 May 112. So, you know, these are just the alerts that sent out. You can see here, and then I'll send out an adjustment just so you can get an idea. So here we adjusted a number of times back and forth, and then on the 10th, did another adjustment. And then on the 11th, it was trading, it blew through our target. So it was over kind of moving through our short strike. So we went ahead and took profit. So we had the original short strike was at 112, and this thing then really blew out to 116. So went ahead and took that off, $185 profit per spread. And so that was on Google. I'll show you what that looked like. So here was when we set it up. We did a number of adjustments because look, it kept going back and forth. It's just a tight range. We were just playing it, taking some premium in, taking a little profit, you know, just in the price down. And then it rips and blew to the upside right here. We were targeting this area here. So went through kind of our target. So we went ahead and took profit. We would have had potentially a lot more profit if we could have held, but it was going through our short strike area. So we want to be careful. So this went, we took it off. You can see the spread went from up to 420. We had our cost was 234. So $186 per spread, 79% return. Here's one we did on Oracle. This was a nice trade setup. Didn't expect it to blow out as much, but this is a really pretty chart. This is the kind of pattern I love to find. I'll show you real quick. See Oracle, see the squeeze, see how tight that is? That's a really nice pattern. I can get this to, so if you look at this, so when we set this up, is right where that line is. So we had this nice volatility squeeze, not a big, huge trading range. You know, you can see 94 up to 96, and just a really nice tight squeeze setting up. So we went long right here, and we did this with a long calendar, call calendar diagonal, and then we adjusted it to a long call condor. And so then I was looking for this 99 as my area to reduce risk and hedge it more. And so what happened was we adjusted this, what we call long call condor here. And in hindsight 2020, if I could have waited one more day, we would have had that, and we could have been adjusted at a much better price. but that's, that's trading. So that's what the chart looked like. So set this up starting out as a long call condor and then adjusted it to a call condor. Okay. So question, what if you don't have much option knowledge? Well, that's the good thing about the service. Good question here, because like I said, a lot of members, all they want are the trade setups, and then they do their own thing. So let's say you don't have a lot, but that's the other reason to do the alerts with me, because I'm going to teach you as we go. You're going to be watching me send out these alerts and the adjustments and the option strategy part of it. And then you come into the trading room, which is open every day as part of your benefit. So you're going to get that. And so you come in, ask questions. We'll go through the adjustments, and I do a daily video newsletter every night after the close, going through that. And then we do a weekly Q&A. So let me just fast forward real quick. These are some great questions. We'll come back to this, but I want to show you what I'll be offering you here at the end of this, if you're interested. And then we'll go through more, but since there are a lot of questions developing. So if you do want to get the service, I'm giving you this a really nice offer here today. You'll get 4 months of all these alerts. So, I'll go through more, but since just fast forward a little bit, and 4 months of the trading club. So all of this at $411, and there's 2 pay. So you get all 4 of my trading alert services plus 4 months of the trading club. So this will be breakout reversal type setups, any that I see, butterflies or long condors, calendar, counter diagonals, and earnings, and selective earnings. Now, like I mentioned, a lot of the members, they just want the idea, the trading idea. They may have their own way that they like to trade it. Maybe they just want to buy the shares. Maybe they want to just buy calls, buy puts, But I will always give you an option strategy that's low risk and, potential high reward. So that's kind of my preference. That's what my goal is, to give you low risk type trade setups with potential for high reward, but you may want to do it different. So that's what you'll get. And so we'll come back to this. But if you want to just jump in here, you can use this link real quick here, and then we'll come back and I'll finish up. I've got a lot more to cover here, but since these are great questions, thought I'd just put this out there right away. If you want to take advantage of this, if I could find my, 1 second here. Here we go. So here's the link, and then we'll go, I'll finish up here. Got a lot more stuff I want to show you, and then any questions, be happy to answer. So if you want to check it out, check it out. Now, this is not offered on the website. It's just, kind of specific to this presentation here today. And if you click on that link, it should pull up this this payment link here. And you'll see Elite Open to Close service, 4 months trade alerts, 4 months club, 411. Now you can stop and start this when you want. If you go on vacation, you want to stop it, start it, you can do that, no problem. And if you do want to pay, there's, you can do 2 separate payments, 2 months and another 2 months. So that's the link that you can use if you'd like to do that beforehand. And then let's get back to where I was, and I'll show you some other really good stuff. But this is also how you can learn options. I've got here, here's a good example. I actually had a testimonial I'll show you. So that really answers a good question here. So let me just show you here real quick. This was Dan. Okay, so this is kind of like your situation. He said, this was Dan not too long ago. He said, you're very diligent, totally thorough. So that's really key to your analysis. That is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades I took with you when I was learning how to trade options, okay? So he was, I sent out these alerts. They're very, very detailed as to what to do. If you just read it, a lot of times you could figure it out if you didn't have any knowledge. So that was, Dan. Now, again, though, like for Oracle, beautiful pattern. I said it was, looking for an upside move. So you may have just said, okay, I'm just going to buy calls or whatever. But I do, option spreads for a lot of specific reasons. So you'll learn going forward how to do them. And then I've got, multiple courses if you want to, study up and learn more. Then as a member, with this alert service, you get membership 6% off of all my courses, anything that I have for the next 4 months. So if you want to, dive more into, learning how to trade options, then here's the perfect place to come, because, that's the thing I like to do. So if you wanted to, get more details on option, just go to courses, trading courses here, and then you'll see all the different courses. Get started trading options. If you want to start out a beginner's course, and you get 60% the discount on any of this. Here's one, $197. Here's my Ultimate Option Guide course. I just finished this past week. So that was just one that we completed. You can still get into this. This was a fantastic course going to all the different option strategies. $597, but you can get a 6% discount off of that. Cycles and trends, breakouts. Here's capitalize on income profits hedging. This is selling options for income, credit spreads, things like that. So again, these are all for you as a member for the next 4 months, and hopefully you'll renew. You'll get this for 6% off. That price will be 60% off. Or calendar diagonals just done in March. So you can get this course. So I've got all, my whole thing is options. So you've got the perfect opportunity if you want to learn it all right here, okay? Okay, good question. So the question is, what do you mean trading around? Well, I can't give trading around. So, when the markets are moving and I send out alert, it may be, when I send out the alert, it might be 55, but then, 2 or 3 minutes or 4 minutes later, it might be 60. So I said trading around. Does that make sense? Instead of, so you have some discretion. You have some discretion. So for example, let's get back to where I was. Here was Oracle. This was a really nice, sweet one. So here it says, so by the 26th May, 12 May, 97.99, call at around $1.55. So that, it might be $1.50. It might go down to $1.50. Might go to $1.60. Like a 5-10 cent range, something like that, around. So once you start getting these alerts, you'll kind of get the better idea. So because you can't get it exactly. So then if I say, okay, trade around 155, then you go in there and you try to do it 155, and you don't get the trade, you're just kind of exasperated. So trading around. So that was the Oracle. So then beautiful trade setup, and the hindsight 2020 hedged it a little too soon. If one more day, this would have been perfect, but it still turned out pretty good, because this trade, we adjusted it into what we call a long call condor and reduced the risk to $27. Okay, super low risk, right? And we had this beautiful range in here that had potential to make around $200 if it had gone out here. But still, with that low risk, we ended up, it started blowing through our short strike area. So we went ahead and took profit at that point in time. So it went from, on the 17th, it went from 27, now it's traded $87. So $60 per spread on your risk of 27. It's still not a bad return, right? Now this could have made a whole lot more, but anyway, it was still a good return. Okay, so that's these are all very, very current. So you can see, and here's one we just did. This is one of my favorites, which I'll probably jinxed it from saying that. But this is IYR. So this is long put calendar diagonal. We've done a number of these because it's been chopping back and forth, but I'm hoping it breaks down. So this was sent out just recently on the 15th, and so you can see here it says, new IYR short, trade around 84.10, daily cycle reversal, and now volatility squeeze with a 513 cross momentum. That's another thing we look at. Okay, so very good potential downside, potential momentum. So looking for a downside target move to 82, which we're currently at. So what we did on Friday, we adjusted this to widen the spread out. So let me walk you through it. So we originally set this up on the 15th. This was earlier in the week. So went out, and I'll just summarize it. So went and bought the 2 June 84 put and sold the 19 May 82. So right here at around $1.15. Okay, so ended up, so that would put you on the 2 June 84 put, short the 19 May, which was Friday's expiration 82 put. Now on Friday, wanted to stay with this trade. I'm thinking there's more potential downside. So what we did here was adjustment, and this was sent out to all members. Now my platform went down in the room. I had to uninstall it, install it back in. But anyway, so we had that problem. But anyway, sent this out on the alerts because it, no problem there because of Telegram. So update on IYR short. So Friday morning, it was trading at 82.65. So the target was 82s, but we wanted to actually keep it because we think there's more potential downside. So this had bounced up and gave us the opportunity to close out the 82 short to Friday's expiration at a profit and then reset and sell below it further out of the 81. So we did that, so adjusted it. So ended up buying to close. Let me see here, it says adjusted the 82 put. So short we ended up buying to close the 82 for a profit. I didn't get that one in. I've got that on another one. I thought I had it here, but we bought to close the 82 short put for a profit and then adjusted it by selling the 81 put for next week's expiration. And this was going out. We had a $60 per profit on this Friday, 57% return, and looking for potentially more. So let me show you the trade where we currently are. So here's the trade when we set it up on the 15th. Potential nice volatility squeeze, targeting down to 82. And if we could break that 82, we've got a potential target to 80, and then even potentially down to 77. So here are my momentum indicators, just kind of walk you through. So we set this up, and we had some profit going in on the end of the day, 519. That was Friday. It was trading 82.39. So we had the spread went from 95. We adjusted this, like I said, that day, into closed out the 82 short put for a profit and rolled down the short strike to 81 for next week. And that then adjusted the trade down to 95, okay? So from the profit that we got from covering the 82 short, and then the trade blew. Now it was trading at 160, so we were up $65 per spread. And this thing, touch wood, still has more potential if we don't get a kind of snapback. So let's take a look. I'll show you the potential here. If I can find my option platform real quick, it disappeared from me. So here is the potential here. Let me pull this up. One second here. Let me pull up the chart so that you can kind of visualize what I'm looking for. So I'll pull this out, and remember this is the retail, not the retail, but the commercial real estate sector. So this is another thing that looked pretty interesting when I was looking at the specific stocks within the sector. I'll pull those up, and this what also makes me feel there's some more downside to it. So here are the real estate IYR stocks, okay? So these are the various stocks that make up this real estate sector. So if I flip through a number of these, you'll see how specifically ugly each stock within the sector looks. So here, I'll just put this up and I'll show you real quick. So here's like ARE, see that volatility squeeze? That doesn't look too good, does it? ARE, here's MAA, doesn't look too good. UDR, they're all poised in a volatility squeeze with momentum down. So this could trigger and really flush IYR. Here's REXR, all of them look the same. So that makes it look kind of interesting. And then the potential, I think, still has more potential downside. So we're trying to hold this for a bigger downside move. That's why we use what we call the calendar diagonal. And so here's IYR. Let me put that back up. So we started out 84.82 and then adjusted it Friday. So now we're on to 84.81 at 95. If we were to get a move down to 81 this coming Friday, this will be up over $200 on our risk of 95. Now, what I'd like to do is try to write it down more, so we could, potentially also look to close out the 81 short strike. Maybe, for profit, we could adjust this to all the way into June 2nd. We've got to work this trade, so we've got plenty of time to work this into just to put debit spread or something like that, because we've got the long dated part of this is 13 days out. So that's the other thing. You'll learn how to do these trades, if you're, following me in the courses and stuff like that. So this has some more good potential to the downside, I guess is what I'm trying to say. So I like the looks of that. And then, so that's a look there. Here's one we did. This just to show you the potential. This is a long put calendar diagonal we did back in December, but this one we did an adjustment on. Here's a short, and then we adjusted this, and we had this adjusted into a credit of $65. So this one went out up $316 per spread on the risk. So that's a kind of a idea of what you're going to be looking at there. And then here's the butterflies. This is another sector. So we started this back. I started doing these butterflies condors back in May 2019. And we've had 127 closed out, 95 winners, 6 break even, 26 losers, 80% win rate, low risk, high reward trades. Here's one we did just this past week. This was a long call broken wing butterfly on Microsoft. Hey, good, Guatem, you signed up. Okay, so this is one where really nice pinning trade, what I call. So we did this low risk butterfly coming into monthly expiration here. So did this in a buying the 310, 315, 322, what we call a broken wing butterfly. So for downside, for an upside move, targeting into 315 monthly expiration. So did this for a total risk of $85. So here you can see where it was sent out. Says tells you exactly how to do it, what's going on. So trading around 309.45, looking for a monthly expiration target move to 315. Good call option, open interest at low. To keep risk low, use a long broken wing butterfly. So buy the 310, sell the 315, buy the 322.5. So that explains it there. Now, what happened on this one? This was a kicker. On the 15th, a few days later, I had a cycle reversal. That indicator that I showed you, this is such an accurate indicator. So I was thinking though, no, it could still grind higher, but when I get that reversal signal, I want to make, I'm pretty disciplined about the trades. So I sent out an alert to take profit. But again, a lot of members do their own thing. So anyway, a number of members stayed with this trade and they got rewarded big time. So let's just go through and I'll show you how this thing looked and what happened. So here was the trade setup right here. Now you can see, so set this up right there for 85 bucks. We were targeting 315. See this activity up here? Now here is the cycle reversal on this day, and we had negative momentum. So Microsoft had a big, huge move up. So I was really kind of being very, very, a little bit cautious on it. and so that's why we had this trade, very low risk. But I saw that reversal, so I thought, okay, well, maybe the next day or two, maybe we get that reversion. So sent out the alert to take profit, and it was a little bit of profit in at the time, but it was right at the end of the day too. So a lot of the members just decided to stick with it, which was the right way to go. And here's how it worked out. So this is what we call a broken wing butterfly. So when I sent out the exit alert signal was on the 15th. It was traded 309.41. So it was up, $20 per spread, 24%. Had a huge amount of potential profit left in it. This had a potential to make, if it went out at that 315, it could make $415 per spread, 488%. So that's what happened. Now, the rest of the week, though, a number of members stayed in. Here's just an example. So this was Gene. He said, Larry, kept a few contracts in Microsoft Butterfly up 143%. And here was Michael. He said, still in Butterfly trade, thanks very much. So here it was on the 17th, okay? On the 17th, it was trading right here. And so it was up, it was trading at 313.79. It was up, went from 85, now it's 222. So, I was sending out alerts, updating everybody that was still in it from the day before. So you can see here I was updating members because we in the trade room, a bunch were saying, yeah, I'm still in it. So, I was still updating. So if still long the monthly penny butterfly trade, trading around 133, looking good. If long multiple contracts, take some profit, look to hold some into it Friday, currently up $70. And then here it was on Friday. It's still long the butterfly trade, trading around 317.50, looking good, currently up $155 or 182% return. So it didn't nail it perfectly because it overshot, but it was still a good trade. So it was actually, went out and was trading right in here, but still had a good profit zone for it. Now here's just another example. Here was another butterfly that we did on Microsoft in March. Again, $73 of risk. And so this one we nailed it perfectly. So set it up right here, targeting this upside area of 290. So set up a butterfly doing that one. And so did the 285, 290, 295, this alert trade, $73 risk, potential to make 427 or 585% return. So this one nailed it perfectly. On the 31st, it was up 63. So it was right here, but here's where it went out. So again, it overshot, but it was up here trading at 291.76. So it went from 73 to 324. And so this was up $251 or 343% return in 8 days. So that's, if you'd like to learn more how to zero in on these really great trade setups and avoid having your precious time, capital, energy tapped inside losing trades, and you're having to manage, let me do a little bit of the hand holding and work for you. So this will get you all that work from me doing it for you. And then you can also do your own thing if you want. So hand-picked high probability trade setups via text or email within minutes or seconds of the evolution. So giving this 4-month alerts, 4-month trading club package. And again, if you're, want to take off a week, 2 weeks, a month, you can stop and start whenever you want. So this is, again, $411. If you break that down, that's super cheap. That's like, what is that, $32 a day or something if you amortize it that way or break it down that way. So if you've been looking for more help and guidance, mentoring, this is also going to help you to learn these different option strategies as well. So this Elite Open and Close service is for 4 months, and 4 months of the trading club is also the benefit, which we'll go through. Breakout reversal type trade setups. These are typically debit spreads and credit spreads, and then butterfly long condors. These are very low risk, high reward type trade setups I like for certain conditions. And then we do a lot of counter diagonals and these selective earnings. So you'll have all 4 of those type, of trades that'll come to you. Now you may not want to take them, but this gives you the opportunity to select to be more selective as well. So basically tapping into my 4 decades of trading plus my proprietary software and research to cherry pick these kinds of trades. And then I match the trade idea with what I think is the highest probability option strategy for the highest return potential I'm always looking at risk first and then the potential return on that. So I outline the trade setup to you in the alerts, and then select the strikes, the puts or calls, the option duration, what are the option guidelines and the specific strategy, and I'll give you the profit targets as well. And then I constantly update during the day if there's something that needs to be updated. You know, if it's really moving, I'll update you on the specific trades. So I monitor the trades throughout the day for you, and then send alerts when it looks ideal to either adjust or close out, things like that. So again, you're going to get 4 months of the alerts, and that comes with the trading club, and we'll go through what that is. Breakout reversals. So these can be like typically debit spreads, call, debit spreads, put, and then credit spreads potentially. Selective calendar and counter diagonals, butterflies, long condors, and then selective earnings trades, which typically we've been doing double calendars. So you'll get a trading guide for each trade setup video review that night. So if we do a alert trade, I'll do a video update on it. Those will go out in the evening. Trades are listed in the archive. Then as a member of the trading club for the next 4 months, you get access to my weekly Q&As every Tuesday that are live and recorded. So for the next 4 months, daily video newsletter. So every day after the close, I'll do a video newsletter about what the markets are doing, what the trades that we're doing, things like that. And then you have access for the next 4 months to my trading room, which is virtual, so open from 8:30 to 9:30 every day during the week, and then discounts off all courses and software of 60% off. So really great deal. And if you look at it and just break it down by the day, I mean, this is, trading mentoring and the trade setups, you're getting all this for basically at $3.42 a day. So, if you're serious about improving your trading, need some help, and you also want some guidelines to follow and good selective trades, it's a great opportunity. So, this will free up your time to focus on whatever else you're looking at or help you to learn a lot more about trading. So no manually combing through thousands of charts and indexes. I'll be doing it for you. And then you can decide, well, yeah, I like that trade or I don't like the trade. But you look at it for $3.42 a day, it's a great way to give yourself a bunch of different trades to look at, even if you don't take them. No more debilitating confusion over the best strategy to use option-wise. I'm going to give it out there to you. And I've been thinking, so when I send it out, I've already thought through, okay, why to do this option strategy versus some other. Okay, there's a lot that goes into it. No more agonizing over the best time frames to trade the setup. How long should you be in the trade? Things like that. So it's all done for you. Plus, you're learning if as you go. So here's one a really nice testimony from Waleed, who's actually a member that's in Kuwait. He said, Larry, I have to mention one thing. I'm subscribed to a lot of services. Here's the link again, Barbara. So while he said, I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing I would like people on this webinar to know is when I get a trade alert from Larry, I do it blindly as time is shown. This man is dead accurate in his recommendations. Thanks, Waleed. And this was what I showed you a little bit earlier. This was from Dan just not long ago. He said, you're very thorough and diligent in your analysis. That is the foundation of the success of your alerts. And again, this was somebody in the, asked a question about it, learning options. Paid for my subscription with the first 4 trades I took with you when I was learning how to trade options. So please feel free to share. So a nice one. Okay, alert summary again of all the 4 services together, 80% win rate. And that's what I really try to keep the winning rate high. So by doing that, I'm keeping, my losers, very low percentage of losers. And so when I send out an option trade, you'll get the entry level, profit targets. And I like to look at option activity and the Fibonacci levels, moving averages to set those targets. Well, yeah, you're saying come with a guideline bear call credit spread. Yeah, if I send out a bear call credit spread, I would say a bear call credit spread. So when I send out the alert, it specifically says what the trade is. I'm not sure I follow your question. So for example, okay, and what option series you use? Yeah, when I send out an alert, I'll go back. I'm very, very specific, okay? Because, you know, I've had these kind of questions before, so I make it as clear as I can. So we'll go back and I'll show you some more examples. I'll give the stop loss level guidelines, trades are listed and archived, things like that. So with the alert service, you're going to get my trading club access to for the next 4 months. So I do, like I said, a trading video newsletter every night. Plus, I'll highlight if there's an alert trade, that'll also be highlighted and gone through. So do that for every night, newsletter, video newsletter for the next 4 months. You'll receive that. Weekly Q&As every Tuesday, usually live and recorded. Access virtual trading rooms open during the week, 9:30 to 10:30 Eastern. And then discounts, 6% off, Traders Educational Vault, all that good stuff. Now with the trading club, what you get there's the access to virtual trading room. This is where you can come in and ask any question on any trades you have, or this is where you can learn a lot about the different option strategies that we're using and ask questions, you know. So this is open to you every day during the week, 9:30 to 10:30 Eastern. Then again, I can do those daily video newsletter after the close. Trades are video archived, weekly Q&A, Traders Education Vault, 6% off, things like that. So you'll get all that good stuff, you know, as part of your service from me. And that's pretty much everything. So just backing up and going through just some of the alerts, so to see how specific I am as far as describing the trade. So for example, here, you can see here it says Microsoft long trading around 280.40, whatever, looking for a breakout over 283, upside target 290, then 295. To keep low risk, we use a long call butterfly. So then I say, okay, so this is Thinkorswim platform. This is what I copy it and I put it into the alert. It says buy one. So it's one contract, which if you're doing, you might do 10, you might do 1,000, whatever. But when you're discussing trade results and everything, you go per contract, right? Because then whoever's trading it can do multiples of that. So buy one butterfly. So Microsoft weeklies, okay? So this would be the 6th April year 2023. So you'd be buying the 285, selling the 290, buying the 295 at around 75. So then to make it even more specific, so if you're not quite sure, I put here into the summary right here, I put, okay, so then that would be long this 6 April 285 call, short, you'd be short 2 of the 290 calls and long the 295. So that's a butterfly. So you're long the 285. So you're basically long the 285, short the 290, and short the 290, long the 295. So that's why I put 2. So you know, if you didn't understand, so you could still figure out $75. So that's a butterfly. Okay, and then here, just another one right here. Go back to this one here. It says IWM short trading at around 177.67, breaking below prior week's low, which was 178.50. And so opens up a downside move to PCT, means power cycle trading, target 1 at 175, target 2 at 174. So the specific trade entry was buy 1. So you might do, some members do 1, some members do 4, some members do 10, whatever it might be, buy 1 diagonal. And so this is from the Thinkorswim platform. I copy it and I put it in. It says December 22, the 16 December 22. So the 178, 174, put counter diagonal at around 240. So summary. So you're long the 23 December 178 put and short the 16 December 174, and that would be around 240. So that's, you know, try to be very descriptive. And then here it says, if long the 178, you know, 174, take some profit up about $176 per trade or 75%. And then here I said adjust balance. So tell you exactly how to do it. Sell to close. This was adjusting it. Selling the close, the 178 put had a huge profit in it, and then buy to open the 23 December 174 put, and then third step, buy to close the 16 December 174 put at a profit, and 4, sell to open the 19 December 172. So then you have the adjusted trade. Here's the summary. So then you're long the 23 December 174 put, short the 19 December 172. Okay, so try to be very, very descriptive so there's no wondering. So that's pretty much it. And any other questions, feel free to ask. And if you'd like to look at any trades, feel free to ask as well. And here's the link again, Charlie. Thanks for being here. So there you go. Trying to think here. So question, if you short, do you prefer to buy long puts or set up bear call credit spreads? I prefer to do spreads, being long puts and short something against it. So that's why you'll see most of these trades, like here's one of my favorite trades. So for a short trade, when we're in a really aggressive moving down market, one of my favorite trades is to do what we call a put calendar diagonal, because it gives you a tremendous amount of flexibility. So for one thing, if you do credit spreads, you're getting the credit from shorting a put, right? Or shorting a call. Now, if we do a put calendar diagonal, we are also receiving credit from selling a short put against the long put, like a put debit spread. But like a put debit spread, what you'll find out is your trade duration is very specific and defined. But if we do a put counter diagonal, we have the potential flexibility to stay with the trade longer. So for example, in this was one that we did, I showed you earlier. So this was doing a put calendar diagonal where we were looking for a downside move, and we did this using a put counter diagonal where we're long the 178 put, okay, for a move down, right, along the put, and then we shorted against it a 174 put. Now, if we did this as just a put debit spread, that's just within one option series. So for example, this says 23 December. So if 23 December was, let's say, a Friday expiration, both the long put and the short put would be in the 23 December. And so once 23 December came and gone, the trade is over. But if you do the calendar diagonal and you have that potential for a bigger move down, we can stick with the trade longer, because here you can see we were long the 23 December 178 put here, but the short put against it was the 16 December. So what we could do there, we could close out that one, have another week to adjust it, and be into the put spread for a longer period of time for a bigger move down. And that's what we did on this trade, and ended up, catching a bigger move. So those are the kind of things. My preference is to do credit spreads are okay, but not something I do. Only very specific. Credit spreads are dangerous, put it that way. People like credit spreads, but if you ever get your credit spread ripped through you, like if people have been selling call credit spreads last Friday, there was a lot of people that got ripped to pieces. Okay. All right. Thank you so much, everybody. Yeah, credit spreads. I'll send out a few credit spreads but not many. They're very, 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 very selective. And these other types of trades give you so much more profit. So you spend a much time worrying about a credit spread. I mean, think about this. I mean, I keep risk low. Credit spreads that have huge risk. I mean, just look at this. Now, what if you had a credit spread, you've been selling credit spreads on Tesla, and you sold out of the money up here, and then Friday it rips through there. I mean, you just get ripped to pieces. So why not do a different spread where you have potential for a bigger profit, in a positive, what we call positive risk ratio versus a negative. Credit spreads, you're risking $2 or $3 to make $1. With the type of trade setups that I send out, you're risking $1 to make $2, $3, $4, or $5. So there's a huge difference. Yes, question, do calendar diagonals have defined risk? Yes, absolutely. Yeah, so because you're long and you're short, right? So for example, you're not short, you're not naked short anything. So for example, IYR, they're very dynamic. So with IYR, we're long the 2 June 84 put. Okay, so that's long. Now the short against it is matched up with this long. So we're short that May 1982 put, but we're not naked short that because we're long the 2 June with it. So it's a spread. So you're not going to add portfolio margining because you're just going to have the spread margin. Okay, so you're not naked short. You're not naked short the 82. There's a long against it. And I teach you all this in the courses as well. So, and then if you're not understanding, I'll also go back over it in the trade room as much as you want. Question: what if the IYR rips past 82? Fine. If it rips past 82, you can close it out for a profit. That's what I look at when I set the trade up. Good question. So what I look at is, can we make profit if it hits my short strike target before expiration? And if it can't, then I usually will not do the trade. So these are all the things I look at before I send the trade out. So with IYR, when I sent out this adjustment Friday, I looked at, okay, that was a great question. So when I sent out this adjustment Friday, I was thinking, okay, well, what if it goes through 81 Monday? If it rips through 81 on Monday or Tuesday, I want to make sure we can take some kind of profit. Okay, so here was the trade. If I can find it here. Okay, so after the adjustment, so now we're long the so we're long the 2 June 84 put at an adjusted price of $1.19, and then sold against it when we did the adjustment, sold against it the 81 put right here at 24 cents or $24, and did that because of the spread to keep your risk lower, and also to get positive theta. See the theta, $1.18. So if you could have just stayed with long put, but a couple things I'm looking at. If you're long the put, you've got your potential is if it goes back up, you lose $119. But the other big thing is, look, this is what we call theta. You're losing $3 a day, and that's going to increase. So if this doesn't go in your direction pretty quick, you're going to start losing $3 a day, and that's going to increase. So that's going to whittle that cost away, that premium. So that's why I like the spread. So then we sold against it, the 81. Now, your question was, what if it rips through 81? Okay, so if it does, we're going to make money. not as much money, but we're still going to make money. So here it is. Let's say here, then I'm going to put this into, I got the date here, so just follow along with me. That's a good question. So I'll put the date on the 22nd, that's Monday, so we'll see what happens. So what if this goes to 81 on Monday, or let's say it goes to 80, okay? Let's say it goes to 80, and your short strikes at 81. So let's go, yeah, so let's say it goes to 80. So I'll look at this and say, okay, if it goes to 80, can we make money? So bring it on. All right. I hope it does go to 80 on Monday. If it goes to 80 on Monday, we'll just close out the trade for about $167 on that risk of 95. So we've got our total risk is on the spread is $95. Now on Monday, if it rips to 80, which it won't, but it could, that would be wonderful. So then we've got a profit. We could just go close it out. We've been in the trade one day. We make our $67 on a risk of 95. That'd be really nice. So 262% return. Okay. Now, you know, I'll look at the intrinsic, extrinsic value, and if we, you know, what if it goes to 79? What if it goes to 78 on Monday? Well, we can look to see what would happen. What if it goes to, it won't, because it's not a high volatility stock, but you know, you can ask the question to see what if. So what if it goes to 78? Well, you'll be up 200. You know, so it's a good problem to have. Now, what if it goes to 85? Well, here's my break even. See these lines down here? So I can see where my break even is on Monday. I can know, and that's what I sent out Friday was, you know, keep a break even stop. And you can see right here, your break even on Monday will be 83.90 right here. So these are, so it's a really nice, flexible, nice setup. Good question. What is the advantage of a counter diagonal versus a debit spread? That's a great question. What I call it flexibility. So let's say, for example, you have the 26 May put debit spread on, okay? All right, so let's say you're long the 84 put, and this is for this next week, Friday. So that's 26 May. This would be a put debit spread, which is a good spread, okay? And then you're short against it, the 26 May 82 put, okay? So you've got the put debit spread. So if you did that debit spread, maybe that cost you, well, I'll just show you real quick. Okay, so you do that, and it's gonna cost you, but the key is, okay, at next week, at the expiration next week, this trade is over. You either make money or you lose money. But if you do it as in what we did, the calendar diagonal, we went out to the 2 June. So we have another week left, or we could go out further than that. We could go out to the 19 June. So if it doesn't go through, hit our target at 82 or make profit, we have another week for the trade. So we can then just close out the, so if we were long the 2 June 84, and we had shorted against it the 26 May 82, we've got one more week. So if we didn't get to our target, make money by the end of the next week, if we still wanted to stay in it, it looks like it's going to move down, we could close out the 26 May short put, which would be a profit if it didn't make it to our target. That will reduce the cost of our long dated 84 put, and then we sell against it the 2 June. Now we've got another week. We sell against it the 2 June 82 put, and now we've got the 84, 82 put debit spread in June. or we can go out further. So we're even more flexibility. So we, we could go out. If I was doing this fresh, I'd go out to the, coming in here Monday. If I wanted to do this trade, I'd probably go out and do the 9 June. So I'd go out 20 days out. That'd be the long, and then I'd short against the 26th, and then I've got 3 weeks to trade it. Or if you want it longer, you can go out. I mean, you go out as far as you want. I go out to the 21 June, buy that one, 62 days, and keep working it. So you've got that ultimate flexibility. Does that answer your question? All right. So yeah, here, Wayne. Here's the link one more time. I think we'll call it a day. Okay. Again, thank you so much, everybody, for being here, and have a great rest of your day and rest of your weekend. Ciao.